Hello again, everyone. Now we are going to run into our Smart Money panel, which will be hosted by none other than Rashad Salamat from Bloomberg. So Rashad, I will hand it off to you and I will disappear.
Thank you very much, Henry, and welcome everybody. And I'm joined by three very well-known guests. We've got Sunaina Tuteja, Head of Digital Assets at TD Ameritrade. We've got Tom Jessup there as well. He's President of Fidelity Digital Assets, and certainly last but not least, David Seamer there from Wave Financial. Okay, let's kick things off and get right to the gist of it. And Sunaina, why did the smart money really miss this rally?
Well, who says we missed the rally? Listen, I think it depends on your definition of smart money. At TD Ameritrade, our mission has always been to kind of break down barriers and enable the retail investors in the RIA community kind of access capital markets and now crypto markets. And, we would submit that those constituencies have actually done pretty well over the last few months, regardless of all the shade that they're getting from certain financial media and maybe some institutions. So I think for a variety of reasons, I'm sure we'll double click into our clients have kind of had a more kind of a steely experience during this meltdown. And I think education is a big component of it, kind of, holding their hand, educating them, helping them understand what's going on and kind of making the right choices.
Tom.
Yeah, I don't think that the institutions missed the rally at all. I think what we've seen, particularly since the beginning of the lockdown in the US and in Europe at the beginning of March, is that if anything, interest in the space has redoubled, and anyone sitting on the fence in terms of largely either hard money thesis around Bitcoin or even pre-halvening positioning certainly came into the market. And I think we've always maintained as an institution, serving institutions in the space, that the influx of institutional money looks more like an incoming tide than a wave. We don't have the peaks and troughs of retail flow, but we do see steady interest up and to the right from institutions, and that's borne out by the survey that we released last week.
And David, absolutely. I mean, we've got internet celebrities like Dave Portnoy going and lording it over everybody, saying that the retail guys are winner, essentially saying, and I think, and I quote, it's no debate. I killed him. He's dead. He's referring to Warren Buffett. So it goes to the same thing, doesn't it?
Yeah. I mean, I think, there was a moment in time in, mid-March when, the market crashed and a lot of the retail guys that had shown up kind of quickly exited, but they seem to come back pretty quickly. I mean, at Wave Financial, we do, kind of more wealth management, asset management. So kind of, mostly for crypto people, but now starting to do a lot more, kind of non-crypto traditional investors. And we're starting to see a large, returning interest. And obviously the macro environment for crypto, this is what Bitcoin was built for back in 2008. So I mean, and most of us in the industry that have been looking at this stuff for a long time kind of feel like, look, if this isn't crypto's moment, or particularly Bitcoin's moment, like there never will be a moment. We'll never see this kind of quantitative easing again, and fiscal irresponsibility and all sorts of things, and pandemics and recessions and race wars, and and there is nothing bad. There's no stronger set of tailwinds any of us could have drafted if you're a crypto believer than what we're seeing.
Yeah. Absolutely, Sunaina. We've also, there's no doubt that retail's gone in, and we've got, I suppose, traditional markets joined in by what's going on with the digital side of things. So they've been moving in lockstep in large part here as well. Does this show kind of a maturing of this particular sector in a way?
Yeah, that's something we've been kind of assessing and studying carefully. There was a lot of commentary in March when the traditional markets were kind of going haywire. Like the analogy that was often used is, the equity markets are behaving akin to a toddler throwing tantrums, waiting for its next fix from the Federal Reserve. And the analogy I would use to describe Bitcoin's behavior over the last few months is similar to perhaps an awkward teenager trying to figure out who he or she wants to be when they grow up and trying to find its way. And there's no doubt that in just a limited 10-year history of Bitcoin, let's talk about that as the core asset here, the number of narratives that have been ascribed to it is astounding. Everything from, hey, it can be a payments rail, it's going to be a safe haven asset, it's uncorrelated alpha, it's a hedge against inflation. I think it's become like a Rorschach test, and everybody sees into it what they want. And there's no debate that when Bitcoin kind of moved in tandem to the S&P, a lot of those narratives were punctured in the short term. But I would submit that the sample size is still limited of 10 years. I mean, gold has been around for hundreds and hundreds and hundreds of years, and even gold at times was moving in tandem with the S&P. So I think we owe Bitcoin and crypto at large a longer runway to kind of stress test some of those narratives.
Absolutely, Tom. To everybody, just jive and jump in whenever you like. And I'd like to create a bit of heat as well as light naturally here as well. And Tom, retail has kind of been kept the crypto side of things going in a way, but do you need a big institutional buy-in really to make this asset class one which all people look at it with a degree of more seriousness?
I think it's happening. I think, by any metric, certainly our own business, certainly the businesses of others on the conference or the webcast, futures volumes. I think that it's maturing. 10 years on, people are understanding the asset class. There's what's interesting is that there are several theses that people apply. It's if I were to summarize what most institutions think, it's a uncorrelated tech play with asymmetric upside. That's how they largely describe Bitcoin. It has diversification properties in a broader portfolio. And I think it is, it's behaving like a maturing asset class. It's largely been uncorrelated. Yes, there have been times over the past few months where it's been highly correlated, but I think someone can correct me on the stat, but in the history of Bitcoin, there's only been 20 odd days or 30 days where the correlation to, for example, the S&P has been at a level where someone would say it's highly correlated. And over a 10-year, 11-year track record, that's not a lot of time.
To you, David, same question.
Yeah, so what Tom said, yes. I think the correlation is overstated in the near term, and people always look at really short periods of time. This is not a correlated asset. Even if you add in the correlation of the last 30 days, but if you look over the last couple of years, the correlation to gold and Bitcoin is much higher than the equity markets in Bitcoin. So it's a little, I think, the world is just kind of going risk on, risk off every other day. I think we're kind of seeing some of the bouncing around, but I think this will show to be an uncorrelated asset, pretty quickly. Again, I think the track is set for Bitcoin to do some interesting things over the next couple of years. So.
And Tom, you recently had a survey, didn't you? You had Fidelity had they released their annual Institutional Investor Digital Asset Survey. What struck you about it? What stood out for you in that?
Yeah, I think that generally speaking, all of the metrics are moving up and to the right in terms of positive direction. So the number of institutions that were constructive on digital assets increased year on year. The number of investors or the percentage of respondents that had allocated to digital assets increased year on year. Some of the concerns that institutions have, namely price volatility, market manipulation, lack of fundamentals with which to analyze the asset or the asset class, those concerns continue to drop. And I think, as others have said on this panel, it's really up to us to continue to educate institutions and bring them to this new asset class. That's certainly the role that we play. We see ourselves as a bridge. And so we're very happy with the results of the survey, but there's a lot of work to do. One thing I would just say when we talk about 36% of respondents owning digital assets, obviously we looked at many different segments of the market. And I think what's been kind of misunderstood is that is the number of respondents. If you were to talk to a crypto native hedge fund, obviously the number of respondents saying they own digital assets would approach 100%. You look at traditional investors, pensions, and endowments, that response rate is in the single digit percentages. So there's a lot of work that needs to be done to get to the broad swath of institutional investors. But in every segment we surveyed year on year, we're seeing an increased interest, which we believe is positive.
And Sunaina, I'm sure you would also probably just anecdotally kind of agree with that, or not. Tell me. Hello.
I hate to not give you the drama by disagreeing, but I do agree. And I think even on the retail and the RIA segments where we're myopically focused, recent events have definitely been a tailwind. And I think Dave alluded to it in his comments earlier, on all of our platforms about a few months ago, I told my team, let's put a little button. We have millions of clients who engage with us through our online platforms, digital and mobile properties. Let's put a button that simply asks, are you interested in learning about digital assets? Do you trade digital assets? Do you want to trade digital assets? And I'm like, listen, if 10 people respond, yay, it further codifies my business case, I'm happy. Well, hundreds and hundreds and hundreds of responses every day chiding me why we weren't moving fast enough. And that pace has picked up even more over the last couple months. I happened to be talking to an RIA yesterday who was bemoaning, oh my God, I feel like I've missed it. Is it too late for me to get in? I'm like, no, it is not too late for anybody to get into digital assets. So I think the current macroeconomic events, we have this unique opportunity to harness that and use that to educate constituents who may be sitting on the sidelines or have been skeptical about it, and really to kind of create that big tent and invite them in.
Oh, absolutely. So I want to stay with you a second because, you're being all Pollyanna about this. So I want to ask whether TD themselves have directly invested in these assets.
So that is not our business model. Even on the traditional side, we don't get into, kind of trading our own book. However, the way we've invested in this category is in three ways. One is unlocking a whole new suite of products and on-ramps that will enable market participants, new era of market participants, to engage with this asset class. And second is through partnerships and investments in startups in the ecosystem. And then third, where we've spent an enormous amount of time, given the constituents we serve, is really around education and advocacy, both in terms of creating a rich repository of credible education content. Listen, I serve a spectrum of consumers who range from crypto savvy to crypto curious to crypto skeptic. And as I tell them, it is totally okay to be skeptical. You get to ask me all the hard questions, but it is no longer kosher to be ignorant and to sit on the sidelines. You have to lean in, you have to learn. So education, and the other reason education is important for us is we know from data that we've collected over decades on the traditional trading side that an educated investor is a more confident and active investor. And given digital assets, which is still nascent and has a level of complexity, education becomes even more paramount. But delivering that education in a way that's more kitchen English versus throwing out, sexy technical terms at them that might be a turnoff. So I think the change in the tone, the change in the modality, and extending that education, and that we do the same with our regulators. Obviously, we have a seat at the table with regulators, and we have kind of represented the voice of the retail client for years, and we're using that opportunity with them to kind of educate the regulators and also bring them along, because obviously, their engagement is critical.
I'm coming to you in a second, Tom, but David, I'm sure that you're probably in the same boat, aren't you?
Yeah, I mean, our LP base is a little bit different. My background is mostly running early stage venture funds. Wavemaker are, instead of traditional funds, I started managed about $500 million. We have, Temasek, World Bank, Hanwha Securities, DBS, a lot of institutional investors there. But they're looking to us to be tech visionaries, risk capital, so, and of those, Union Bank's also a pretty large LP of ours. Like all of those have already built out crypto platforms similar to like Fidelity's. They've built custody, their venture arms are investing in crypto projects, blockchain projects. So, and most of our LPs are Asia, which is way ahead of the curve. And obviously the audience of this conference is Asia. We see very slow movements in the US and Europe compared to what we see in, Korea, Singapore, Hong Kong, which is why we're excited to do a conference with OSL, focus on this part of the world, just because, again, there's so much more activity there than there seems to be in our backyard. Being here in the States.
Tom, absolutely. And Tom, the original question was, have you at Fidelity been investing directly in this space?
Yeah, we maintain a small portfolio of venture investments in the space. We also, since roughly 2015, have had a mining operation at Fidelity. One of the ways that we actually began to learn about the technology when we decided it was something worth focusing on. So yes, we maintain a very small position in mined Bitcoin, in addition to running my business. And we've been focused on this space now for about 5 years.
Wow. I didn't think it existed 5 years ago. Anyway, that's just me. David, it goes to the VC, it goes to the average investor as well here, but how do you value one of these, I suppose, one of these crypto currencies or whatever there? Because, I mean, ultimately, shouldn't the question really be about, no, what's it trading at? The question should never be at what valuation it's trading, but it's the valuation that it deserves. How do you come to that? And of course, there's a mismatch quite often.
Yeah, it's no different than traditional venture investing. I mean, you're looking at tokens, there's token economics. I mean, there used to be in end of 2017, obviously there was this theory that all the old paradigms were thrown out. We're back to measuring eyeballs, using the internet term, and things like that. And it turned out that was all wrong. It just, people made a lot of bad investments. But you can, you should be able to DCF any investment, a venture investment, a token investment, or whatever. You have to put whatever assumptions you put in is what you get back, but you can do it. And we're seeing that now. We saw the altcoin shakeout in 2018, where tons of these projects, went to very low values, if not zero. And now we're starting to see more realistic valuations based on network activity, based on, where the platforms are and things like that. But it's exactly the same as I think putting on a traditional VC hat. You look at the company's the prospects, what the economics actually accrue to that token, if it is a token investment. Just FYI, we mostly do non-token investments in our active strategy funds. We mostly do equity, VC, seed stage investments. But the cadence is all there. I mean, you're trying to find good teams with vision and, and a great business plan and solving a big problem. And obviously the token is a harder thing to value in some ways, but the fundamentals are still there.
Yeah, and Sunaina, it comes to you as well, because as you are sort of a cheerleader for all this, you've got to come up with some way of valuing these propositions here as well. Not what they're trading at, but are they worth that? And that's the thing. And you can't have a one-way bet, as some retail investors are at the moment, thinking that nothing's going to come down. I mean, they think Newton was wrong, it would seem.
Well, I mean, Newton was proved right. I'm sorry, go ahead.
No, go finish your thought.
No, I mean, Newton was proved right. I mean, prices did come down. We had the huge crash. The market went down 85%, and by the end of 2018, there was a huge amount of washouts. And then, now a lot of the biggest coins that have come out are things like the Binance coin and the exchange coins and things like that, where there's a relatively, I think they're overvalued still, but there's a very easy, you can't actually look at cash flows, for Binance, 10% of revenue flows to burning those coins out of existence. That's you can look at it on a more traditional basis and say, like, okay, Binance is really big, they generate a lot of revenue, the token must have, XYZ value. So you right. have seen the shift.
So Sunaina and then Tom, please.
Yeah, yes, I am optimist, guilty by charge, but I do have a grumpy side, so not to worry. I think, akin to what Tom and Dave said, our venture investing in this space is more focused on the picks and shovels in terms of building the ecosystem, and less so on investing directly into any token. And that investing thesis is really predicated, I would say, on two things. One is really looking for what are those gnarly problems that we need to solve, and understanding why those problems need to be solved and why this technology is uniquely qualified to solve some of those problems, not just for the crypto market space, but then what can we transfer back to the capital markets and kind of create that synergy. And then the second thing I would say that's important for us from an investing perspective is, I live in the Valley. There's this ongoing competition between an incumbent and a new entrant. And there's this saying that, can an incumbent with scale, recognize an opportunity and execute with speed before a startup attain the scale? That's really the competition, right? It's the scale versus speed. And for us, through partnerships and investment, we kind of get the best of both worlds. We are able to bring our core competencies and our scale to the table and co-create with a new entrant who can perhaps move along with speed. And we have the benefit of kind of riding their coattails. And then, and I think that adage of, what is that? 1 + 1 = And then the last thing I'll say is, there's, I think it's a Jim Barksdale quote, that there's really only two ways to make money in business. Either you're bundling things or you're unbundling things. And usually the pendulum swings one way or the other. What we're seeing happen in the crypto ecosystem, which is just so fascinating, is we're seeing aspects of this ecosystem bundle, and we're seeing aspects of this ecosystem unbundle. And you can't do all things by yourself. And I think that's where making investments and having a venture portfolio becomes critical.
Yeah, look, I would say as it relates to decentralized applications and new token projects, I agree with Dave that it's very much like venture investing. You're looking for the best teams. In some cases, people are looking at the quality of the people committing code to these open source projects, what other projects they've been associated with in the past. They're looking, basically that would be the proxy for management. And then obviously there's an expected return component in terms of these protocols being adopted at scale around some use case in the future. As it relates to something like Bitcoin, we're continuing to see the evolution and emergence of models that there are many of them, but one model which folks are looking at and are perfecting is effectively the network economic model, which is a function of the number of participants on the network as a leading indicator of the value of the scarce asset that exists on the network. So I think, again, you think about bridging the old and the new. Some of these new, when people talk about fundamentals or valuation models, the things that you look at in this space look different than what we would look at in the equities markets or other developed capital markets. But I would say, and I don't know this to be true, but how long did it take, for how long were equities around before Graham and Dodd showed up and created the canon on value investing? It's going to take investors to develop the right frameworks to value these assets, whether they're cryptocurrencies or decentralized applications. And there are enough people now focused on this where some of these standards and approaches are becoming more widespread.
David, just quickly here, as only to you, as a VC, et cetera, what's the fundraising environment like?
Well, two parts. So for fundraising for funds, with COVID, world or whatever, it's poor. People are mostly kind of going risk off, and they're looking for pretty safe bets and things like that. So we've, for on average, I'd say that's been a little bit slower. Now it's been kind of surprising that for entrepreneurs, like projects are still getting, funded pretty readily by the crypto blockchain funds, traditional VC funds. I'm actually kind of pretty strongly surprised that it hasn't slowed down more. I'm pretty convinced the world's heading off a cliff, and that this is all going to get a lot worse before it gets better. So we've slowed down, but a lot of our peers seem to be pretty aggressive and not really slowing down a whole lot as far as making new investments and so forth.
Now, you talk about the environment. Sunena, how does the current economic and social environment affect the way you're looking at this? And how has it affected this in many ways?
Yeah, so a lot of our thinking around this space and really a lot of new adjacencies that we might be entering into or building is really client-driven and kind of guided by the voice of the client. So as I alluded to earlier, the interest for and awareness around digital assets and just the demand for education and access and on-ramps from clients is definitely kind of, taken up, which is nice to see. And, we're really leaning in with education and content. The other aspect of it is, yes, building for digital assets is different, but, it's that saying, there's nothing new under the sun. It's just a different iteration. And I think it was Matt Levine of the Amazing Money Stuff blog who once quipped that, Bitcoiners are simply relearning the financial history, but at a much accelerated pace. So, we try to kind of keep an anchor on, what have we done and learned and how have we overcome moments of turbulence over the last 40 years in our traditional business, and kind of what can we port over and what can we take from that as we lean into this asset class. Yes, there's a whole new set of problems for which no playbook exists, and we're all kind of flying the plane while we're building the plane. But there's a lot of stuff that we can kind of reflect back and learn from history, and in fact apply and accelerate our journey when it comes to digital assets.
Yeah, Tom, very quickly, the current economic environment and how it's affecting this space, very quickly.
Yeah. So look, our survey ended at the end of February, and we had a very positive response year on year. I would say since the pandemic, interest has only increased. So I think if you were to do the survey, 2-3 months after we ended it, you'd see even more positive results. So I think that for anyone who has a macro view on Bitcoin as a hard asset, I think they are more aggressive in putting money to work. At the same time, we continue to see this steady tide of folks are developing their own investment theses and then eventually thinking about allocating to the asset class. So the macro environment's generally been positive for this space.
Last question to all of you, just 1 minute each on this. It's your final word. Now, people talk about the new normal. I'm sure we've all had this phrase pop up every few years about the new normal. It always turns out to be looking like very much the old normal. Okay. The thing is it going to be a new normal, or has COVID essentially accelerated what was there in a way that wouldn't have happened unless this pandemic had occurred? Quickly, and for you, David, first.
Yeah, I mean, I'm assuming you mean just kind of everything, not necessarily relative to Bitcoin. Yeah,
absolutely.
Yeah, I think this will just accelerate a lot of things. I mean, the work from home, the kind of slow down in business travel, the wearing that, I've worn masks for very long, but we'll wear them for a while. I do think this is a big change for the world. I think we're seeing some of that, with the protests and things like that. I mean, obviously there was a trigger event, which was terrible. But I don't think that trigger event would have spurred what happened now had it not been for this macro environment of COVID and people being at home and a lot of just frustration and whatnot. So I do think this is a new world. I don't love the phrasing, but I do think this is real. This really is a change. I don't think the world will ever be quite what it was before. I think people will kind of have to figure out a new normal around these new aspects. So,
Tom?
Yeah, I mean, maybe sort of narrowing the focus. I just think a lot about picking up what Dave said about the future of work. And, Fidelity is a very large organization with millions of clients. And our entire organization has been working from home for the past several months. So I think about the implications for everything from commercial real estate to travel to technology. And I think once we all come out of hiding and end up being back in a work environment, I think we'll see more of a hybrid work environment where there'll be much more fluidity between being in an office or traveling and being at home. And I think just in that small domain, that should have significant implications on how we think about the future of work. I don't think we go back to the old ways of working.
Well, that's one aspect. Sunaina, last word from you. Just is it a new normal or is it an accelerated old normal?
Well, since you brought up our BFF Newton earlier, maybe I'll close with him. I think his first law stated that things in motion tend to stay in motion unless, there's an external force. And I think COVID is that external force. Though, I am a little bit skeptical. I think there's a lot of things that this will accelerate. Either things that were already kind of going the way of the dodo are going to go to the way of the dodo faster. Things that we were already starting to adopt, I think it's gaining traction faster. But I'm a little bit skeptical about how drastically things will shift. The notion of people are never getting back on planes and all of that stuff. I'm a bit skeptical about that. I think specific to our category, what I'll end with is what's heartening for me, despite some of the negative commentary, is we've bemoaned in the financial services industry for years how households haven't participated in the benefit of the capital markets, that they haven't, chosen to invest or don't know when to start or how to start. And, I like that, we welcomed a whole new generation of investors into the market, whether it's digital assets or traditional assets. And, I think Bitcoin is making saving and investing sexy again, and that's great for everyone.
Thank you so much, Sunaina. To David, Tom Jessup, and of course, David Seamer. Henry, I'll pass it back to you now. Thank you so much, everybody.
Thank you, Rashad.
Cheers.
Thank you very much. That was fantastic, Rashad and all of our panelists. It was a pleasure hearing your insights. To our audience, we will be back in about 5 minutes with the next panel, which will be an overview of regulations in Asia and beyond. Thank you.